Hello, everybody. So, this is one of my first videos in the topic explained management accounting, which is your F2 paper. This particular topic uh, is regarding management accounting versus financial accounting. It's a small topic which I would, so I'm planning to make a concept video on small topics like that so that it's easier for the person looking for a specific topic can pick the video up and just watch it. And also it won't be too time consuming to watch like a 15-minute video. So let's understand management accounting versus financial accounting. So there are basic particulars that I would be writing here and whether it applies to management accounting or to financial accounting. Let's tap into that. Firstly, what are financial accounts and what are management accounts? Financial accounts are things like your balance sheet, your income statements, your statement of cash flows, the statements of equity, correct? Whereas management accounting include things like your future budgets, right? Your costing, all of that. Now, is either of them legally required? That's the first question. Well, financial accounting, yes, it is legally required. But management accounting, no, it is not legally required. It is something that management makes it by choice. Whereas financial accounting is required annually to be made and to be filed. And then basis on that, all your taxation and all of that gets followed. Correct? Then your time period. So management accounts are obviously made by looking at and tapping into figures and information from your past, as well as something that happens or would happen in future. For example, there's some event that is going to happen in future. In order to be prepared for that, the management would create some budgets, would create some strategies, would make some plans out so that the event that will happen in future can be carried out smoothly. Whereas financial accounting only looks into the past, only looks at the past figures. If you've heard of what opening balances and closing balances are, it only picks up balances from the past and makes amendments to the same particular figure. And then that gets carried on to the next year and becomes the opening for the next year with the necessary changes. So that's about time period. Now, who are the users? The users are the internal people, which include your employees, the management. In case of management, there is the senior level management, the middle level, and the bottom level. We would talk about this in a separate video. So these are the people who mainly require and who mainly access management reports and management accounts, right? Whereas financial accountings are used by external people, external users. For example, shareholders. They are obviously interested in the company's profitability, the company's liquidity position, so that they can make their investment decisions. There's government, who's obviously interested in the financial accounts of a business. There's banks who are interested, but in financial accounting, sometimes even internal users can be interested because if the company is not doing well in monetary terms, there have to be some changes which need to be made internally as well. Sometimes it's important to make the necessary changes, make improvements internally in the company so that your external output gets better, efficient, correct? Now, what is the purpose of each of them? So basically, management accounting, the purpose is to aid management in planning, in decision making, and in control. Let's talk about planning. What is planning? Planning is the setting of goals. It is a process on how to achieve that particular goal that you've set, which is based on the information that you found out, basis your internal information. It is also one of the ways in which the goals can be achieved. You have to find out, you have to identify what are ways in which you can achieve your goals faster, cost effectively, efficiently, economically. So those are the things that are discussed under management accounting. Whereas what's the purpose of financial accounting? Financial accounting, the purpose is to record the financial position of the business. Also, how the business, the company, the organization is performing in monetary terms, in real terms, in liquidity terms, in money terms. It's required to understand where it stands annually after all the sales and purchases and the costs that have been incurred, all the incomes that have been taken into consideration, where the company at the end stands. How is the company performing, right? Decision making is basically with the help of the information that you find out through your data, which is processed into information, you can make decisions. For example, there's some budget which was set last year. It your actual budget, your actual expenses did not meet your planned budget. You need to find out why that happened. Once you find out the reason, once you identify why that happened, you would make a new decision as to now whether the, the new budget has to be revised in terms of that. Now, control, if you talk about, control is basically is to collect information on the actual results. Then you have to compare that actual result with your expected result, the one that you planned, the one that you budgeted. If there is a difference, then you have to obviously investigate, right? And then you have to revise the original goals if necessary. Basically, the three of them are interlinked with each other. You plan, you make a decision, and then you just revise if necessary. But this is the main purpose of management accounting. There's nothing else that has to be done. The output would therefore be reflected in financial accounting. Now, format. Does management accounting need to follow some specific format? No, not necessarily. But managers can decide their own staple presentation that is the most useful for them. Whereas for financial accounting, yes, according to the company law, the accounting standards must be complied with. There is a particular legal format that the government gives you, and you have to follow that. It is a legal requirement, and hence there is a legal format to be followed. You can't do it the way you do management accounting. And now, what is the nature of information in terms of management accounting? As you heard, I kept saying the word monetary and non-monetary. What is monetary? Monetary means some information, something that is in money terms, and non-monetary, something which is not in money terms, which is not in financial terms. So management accounting includes information that is monetary and that is non-monetary. Whereas financial accounting deals with monetary information only. It does not have non-monetary information. There is a notes to accounts that you make under your balance sheet and your P&L, which would only explain certain adjustments, certain complex figures and calculations as to how this amount came, how you got the balance. But there is nothing apart from that which is non-monetary. In fact, even that is not non-monetary. It's just something that supports your workings, right? So this only has monetary and this has both. This is the most simple concept in management accounting, and you just need to understand and know these particular objectives, these particulars that I've written out here. Once you know this, I'm sure you can answer that question. So that's about it. Thank you, everyone. Stay tuned for the next video.